Rob, James, good morning to you both, and thanks for joining me to talk about the half-year results for Breedon.
Good morning.
Morning.
Rob, if I could start with you. It's only been a few months since we last spoke, but it looks like Breedon has made great progress in this first 6 months. What would you pick out as the highlights?
So I think the first highlight would be the results, and it would be the strong performance that we've delivered. And I would just like, on behalf of James, myself and the board, to say thank you to all our colleagues for delivering that. I think moving away from the numbers, I would like to pick out a few of the highlights we've made on our strategic priorities. In respect of our sustained priority, I think the big standout would be the launch of the Peak Cluster carbon capture and storage project that we held recently. I think moving on to the optimise priority, I would single out the kiln reliability at our 2 cement plants, which continues to be world class. I think then in terms of our expand priority, I would mention the 3 bolt-ons that we've done in the first half, complemented by the continuation of organic investment in the business.
And James, when we were last speaking in March, you just reported record results, and notwithstanding that, it's been another very strong first half financially. What highlights would you call out on the financial side?
It has been a really strong first half to the financial year. We've grown our top line by 11%, we've grown our bottom line by 5%, and that's despite volumes being lower as we expected coming into the year. It's been underpinned by some really good cash conversion as well, and the balance sheet is in very good shape at the half year. Leverage is 0.7 times, which compares with 1 times at the half year of 2022. So we're very well positioned as we come into the second half of the year.
And of course, Breedon introduced a dividend for the first time in 2021, and we read today that you've just grown the dividend in this period. Can you just talk us through the thinking behind that decision?
So we've increased our interim dividend by 14%. That's significantly ahead of the earnings that we've delivered in the first half of this year. And that starts to move us towards that 40% target payout ratio that we set in place at the time of the Capital Markets Day back in November of 2021. And I think it's a sign of the confidence that we've got in the group and in the group's prospects as we sit here today.
And so bringing it back to you, again, thinking back 6 months, the economic environment was a little bit uncertain, and yet notwithstanding that, Breedon's just demonstrated it's made progress across a number of, in fact, all fronts. As we roll the clock forwards, how do you feel about the outlook for the group now?
In many ways, it feels very similar to how it did 6 months ago. There was uncertainty around, and interestingly, during the first half, I think confidence did improve, but then it deteriorated as we exited the first half. I think the key thing I would flag is that there are short-term uncertainties in growth prospects, in construction spending forecasts, but the long-term structural dynamics in infrastructure and house building are there and are strong, and Breedon is well exposed to those end markets. I think what I would also say is that the Breedon model and the people who operate it have demonstrated our resilience multiple times over the last few years, irrespective of the economic backdrop. And so I believe and have confidence in our ability to continue to deliver.
Well, Rob, James, congratulations on a very strong first 6 months, and thank you for your time today.
Thank you.
Thank you.